The single most important number to offset the bears is the search number. So search revenue up 12% was well above the whisper number of 10% growth and above the Wall Street consensus number of 9% growth. And they also had 4% click volume, which basically is the same as last year. And that's up from 2% click-through rate in the first quarter, which is positive because the bear case here is that generative AI answers lower than the economics of Google search, which is the big money engine here. So the single most important number was that search grew ad revenue 12%, which was 300 basis points above consensus view. The second most important number is cloud, right? They're still out of capacity with cloud, but their cloud business grew 32% at a 20% margin. So that's fantastic. So they're really pricing up now that they have capacity constraints. And the third most important number is YouTube. YouTube grew 13% of revenue, and we think it's worth $73 a share here if it was separately tradable and not confined within the Alphabet conglomerate. So, but I would say those are the three most important segments that people are talking about. But the bear case really is highly focused on the search revenue growth.
And that's exactly where I want to go right now. Going into this print, there was so much concern about the cannibalization of traditional Google search. Why aren't we seeing that?
So what they're saying is that what happens when you have those answers, when you put in a Google search and then you get an answer, is that people are spending 10 times more time, 10% more time asking the next question, and that the shortfall in clicks per query is made up by the fact that people spend 10% longer, which then lets Google serve more queries or more ads. So that's what they're saying, is that the demonetization is about equal. That's their words, about equal. But I think part of it is the extra time people spend using the answer format is offsetting the actual the downdraft in the economics per query.
Hey, the extra spend, the up again Capex, initially everyone was saying, well, that's why the stock traded down in the aftermarket. It made some folks, or at least some investors, it felt like initially nervous. What is your take on that? I think our own Mandeep Singh was saying, well, listen, it sounds like they're getting the demand and they're spending to meet that demand.
Yeah, I mean, I would say that. I would say the other thing that's going on is that I think one of the reasons the stock was a little volatile is the operating income grew 14%, the top line grew 14%, 14%, and it sort of looked like there was minimal operating leverage. But what they told us on the call that was buried in the financial statements is those costs included $1.4 billion fine, legislative fine, regulatory fine. So if you subtract that just to look at costs, the most important point we would make that I think largely is being missed, it doesn't have to do with revenue, has to do with the fact that by integrating generative AI into every aspect of their business, they've got really accelerating revenue, which everyone's focused on, but their costs are going down. Okay, that's not fair. Their costs are just not going up as fast. There's a lot more operating leverage here if you exclude the fine. So I think that's why I think once they said there was this big fine in the costs, people realize that generative AI is really lowering or increasing the productivity here. And so the operating leverage is margin expansion is faster than people think at a time when revenue is also accelerating over consensus view.
One thing I loved in your research, and you put this right up top, Laura, is you said, we like Google's strong strategic position as #1 in search, #1 in streaming, YouTube, #2 in mobile, Android, #3 in cloud, #1 in autonomous driving, Waymo, which Tim and I are both in love with. And you say LLMs make data more valuable and Google's data is best in class. Again, your view. Is Alphabet in many ways the one to beat? And why hasn't the stock been, I don't know, doing more this year?
You know, I think Google, so I would say their execution has been very haphazard. It's not. And Wall Street really prefers leaders that lead from the front, like Meta, like Mark Zuckerberg. We like, visible, clear, visionary leaders. And that's not what's going on here at Google. But, Google, just sort of despite itself, really does have the human capital and culture and financial resources to fund what will be a retooling of American business, which is the generative AI backbone infrastructure that they're building, and they're leading by executing within their own. They're showing what's possible by executing, implementing generative AI into everything they do, every product they have, and every cost center they have. So this is what's about to happen to America over the next decade, is companies that follow Google's lead will have increasing margins and accelerating revenue. And if you don't, which requires a cloud, by the way, you can't do this without cloud. If you don't, you will go out of business because, in my opinion, because the companies that use generative AI to increase productivity and margins and increase revenue will get higher multiples from Wall Street.
I know you said search,
Search,
cloud,
streaming.
Search, cloud, and YouTube are the three most important numbers, but we'd be remiss if we didn't ask you about Waymo and the expansion that the company said is coming in the, quote, near future. Here's what they said. Alphabet hopes to expand Waymo to all cities in the near future. How do you look at this as an analyst on this company's stock, as an analyst for the company, and material contribution?
So you guys love the service. You just said so. So I don't like it in this sense that right now, I think the most strategy is what you say no to. And what Google should be saying no to is anything that isn't generative AI related, because this is a race and a war. And they are spending a fortune on generative AI. Good for them. But Waymo is another huge sunk cost or financial commitment. And I would like them to figure out a way to do Waymo. They are ahead. They are number one in autonomous driving. I would like them to keep the data, because I think data in the real world plus the virtual world is worth more than either world standalone. So I like the data aspect of Waymo, but I do not like the capital commitments, which compete right now with the generative AI capital commitments.
What are the capital commitments? They haven't been totally clear about that. What do you view them as?
Well, they sit in other bets, and I think other bets I'm forgetting, but it loses typically $3 to $5 billion a quarter. So it's like $20 billion a year. And a lot of that is Waymo, and it's their healthcare initiatives. And so I just think that money, they just upped Capex by $10 billion. I would like to see them take it out of other bets, but the primary other bet is Waymo. So I think they're unwilling to relinquish their pole position because now Tesla's coming after them. So I think, look, they are number one in all of these strategic segments because they get there early. And so they're early to Waymo. I just wish it wasn't as capital intensive. The losses weren't as big at a time when Google should be spending all of its focus and resources on generative AI.
Laura, we really, really, really like Waymo. I'm just going to tell you, really, I even close my eyes in a Waymo. That's how comfortable
Laura's
I felt.
in LA where they have Waymo.
I
We're
know,
in New York where they don't have Waymo yet,
I know.
So.
Hey, listen, we've got about 3 minutes left. There's so many different places we would love to go with you, but you pick, because we've got Apple reporting next week, Meta reporting next week, Amazon reporting next week, Disney in early August, Netflix already out, and then there's the late night wars. What's interesting to you right now that you think the Bloomberg audience and investors really need to be paying attention? And it can be something else beyond that.
Let's do Apple because it used to be the biggest company in the world. Now I guess NVIDIA is. But what I would say about Apple, we have a hold here on Apple, whereas we have a buy on Alphabet, Google. I think Apple is in a box because when you listen, for sure, when we hear Meta, who's spending hundreds of millions of dollars per person to create a super intelligence generative AI group. And yesterday, there was no sentence on the Google earnings call that didn't have AI in it. So, these companies are really talking. Amazon will also, because that's being run, Amazon now is being run by the AWS, founder, essentially. He talks about generative AI a lot. So the one that's not the same is Apple, and people really want to see what's happening with their generative AI strategy. And how is Apple either 16, iOS 16, iOS 17, iOS 18 going to keep up with Android, which is Google, who last night told us they're integrating generative AI tools into everything, including Android. So I do think there's a bigger threat to Apple's only business, which is its iPhone business. We think it's a single product company with upsells to other devices. We think the anchor tenant there is the iPhone. So we really want to hear how they think they can compete when they are saying nothing about generative AI. And they're spending $12 billion on Capex, which is the same number at Apple for the last 3 years. When we just, every single quarter, we show up on the Amazon call, the Meta call, the Google
Right.
call, they're raising Capex by $10 billion at a time, every
Laura,
quarter.
30 seconds on Apple. Is Tim Cook the right leader to guide them through the AI era?
Oh, so harsh. I'm going to go with no, but so harsh. No, I don't think so. I think we need a wartime CEO. And I think Tim Cook is great at a lot of things, but I don't think he's not proven great at this technological disruption called generative AI.
Got someone else in mind that you think should lead it? 10 seconds.
It's an impossible job. So no, I have no idea in mind for who could replace him.